Well, good morning and welcome to Lesson 4, which covers Chapters 6 and 7 of your textbook. Chapter 6 covers internal controls and accounting for cash. We continue our discussion on fraud prevention methods as we discuss internal controls. 9 items are listed in the text that we want to take a look at. Number 1, separating duties so that theft or fraud requires collusion. Any job where there's a potential for fraud should be divided among 2 or more employees so that they have to cooperate. The idea is that 2 people can keep a secret as long as one of them is dead. In other words, sooner or later one will turn up evidence. Number 2, hiring and training competent employees. It's important to have competent employees. That will reduce fraud. Bonding, which is a form of insurance. Bonding of key employees is helpful in preventing fraud. Requiring employees to be absent so that a replacement can detect fraud that was taking place. Number 5, written procedures for processing transactions so we can check that people are following the procedure. Number 6, establishing lines of authority and responsibility so that fraud, when uncovered, can be traced directly to the person perpetrating it. Number 7, using numbered documents like checks, sales invoices, and so forth helps reduce this incidence. Number 8, using physical controls like locks, fences, security cameras also helps. And number 9, regular performance evaluations and audits. Even the best system of controls cannot totally eliminate fraud. However, it can greatly reduce the temptation and increase the likelihood of early detection. We now discuss cash accounting, which is critical to every firm. If a business is unable to pay its expenses, it will be either forced to borrow or go bankrupt. Cash includes things like demand deposits, that is, checking accounts, and various cash equivalents. The latter are generally short-term government and commercial notes that can be quickly and easily sold at no loss of value. Controlling cash assets is difficult because of the ease of embezzlement and fraud. Cash has small bulk with high value, and the rightful owner of the currency is hard to prove. Cash receipts and payments should be checked and verified by 2 or more employees. Bank statements should be reconciled with the true cash balance as shown in the adjusted cash ledger. Any errors in recording cash balances are recorded to a special account called cash over and short. An example is given on page 305. For items that are paid by currency rather than by checks, we use a petty cash fund typically. This is a lockbox with sufficient cash for small transactions. We establish the fund with a debit entry to petty cash and a credit to cash. As money is paid out, receipt for each purchase is recorded and placed inside the box. Thus, the total of cash and receipts remains constant. When the cash runs low, the receipts are totaled and entered into the record with a single entry under the heading of miscellaneous expenses. The cash is renewed and we continue on with our business. The chapter closes with a discussion of the annual report, also known as the 10K filing. This report differs between privately held and publicly traded companies, but is required by the IRS of all corporations. The report consists of 4 items: the financial statements, the footnotes to the financial statements, management discussions and analysis, and the auditor's report. Firms that are publicly traded have stricter reporting rules established by the Securities Exchange in addition to generally accepted accounting principles and practices. Chapter 7 presents accounting for receivables. We open with an explanation of how to record uncollectible accounts. 2 methods are described: percent of revenues and percent of receivables. The direct write-off method is shown for use by firms with only small numbers of accounts receivable. Accounting for notes receivable is described next. And finally, we look at credit card sales and the cost of financing credit sales to the firm. Keep track of your lesson notes, and don't forget we will do the homework assignment together in class this coming Wednesday. Looking forward to seeing you all. Bye-bye.